What's up, everyone? It's Rob here. Welcome back to the stream. We've got another crazy day ahead of us. It looks like stocks have continued to sell off even after we ended the stream on Friday. A lot of stocks are not doing very well. We're going to see if that market pain continues today. Although I will say some stocks like DWAC ended up pumping in the pre-market off of news that they successfully raised $1 billion in capital pretty darn fast. And first off, good morning, everybody in the chat. Good morning, Kitchener, Silver, Ambition, Rich M. Welcome, everybody. We'll start by switching on to just these four, and there are a couple of stocks actually that are doing pretty good in the pre-market, DWAC being one of them, but also CFVI. This is the Rumble IPO. So it actually pumped up to highs of $16.19. I think that might be an all-time high for them. Yeah, that's an all-time high, and they're trading pretty steadily above 14 bucks. So they're trading, it looks like, at 14.68 right now. So anyone who invested in the Rumble IPO is probably up on money. I mean, it would be tough to lose money unless you were investing at the very earliest hours this morning at 16 bucks. You're probably up on money on the Rumble IPO. So good morning, Maria. Welcome to the chat. Looks like we're getting some of the regulars in already. And I'm sure this is a pleasant surprise in all this market bloodshed to see that CFVI is doing so well. So congratulations, anyone who was in on that. That looks like a good buy right there. And NAKD is kind of sitting around 55, it looks like, as is Sundial. Both NAKD and Sundial at 55 cents per share. Rich says, watched CFVI supposedly merging with DWAC. Also, Trump secured $1 billion already. Yep. I saw that. DWAC up quite a bit on that news, so up to 47, it looks like. Struggling to stay above 50, so we'll see if it can get back up there. And Kitchener Leslie says, I told you about CFVI the day before the Rumble announcement. Did you? I don't. Maybe I missed it in the chat, man. Maybe I missed it in the chat. And good morning, Rocky Mountain Gobblers and Tin Boone. And Worlza. Maybe I missed it in the chat, though, Kitchener. Potential. I mean, are you saying you told me about it on this day when it pumped up big? Because I think that's when we first heard about it. Then I think I do remember you saying something about it. Yeah. But what we were also going to look at, which we haven't taken a peek at in a little bit, is crypto, which has actually fallen quite a bit since we've last looked. Bitcoin is down to 48,000. Looks like over the past 7 days, it's fallen by about 15%. Now, this happened, I believe, late in the day on Friday. So, all in all, people are feeling some crypto pain. If you look over the past month, it's been moving down pretty steadily over the past 3 months. Bit of a different story. It's actually back to where it was about 3 months ago. And over the past year, we can see the charts, it's looking okay. It's not looking amazing, right? It's not near its all-time highs, but it's not looking horrible, right? It's at 48,000. It is continuing to fall a little bit. It looks like we're having a little bit of negativity right before the trading day begins, although this is trading 24/7, so it doesn't really necessarily matter when the stock market opens. But all in all, Bitcoin's not looking incredible, right? The chart's looking somewhat scary. You never know when cryptos are going to take a huge plunge. They're a lot more volatile than stocks, a lot of people have found, and we'll see. What's Ethereum doing? I don't think Ethereum got hit as hard. Yeah, so over the past 3 months, it's still up quite a bit over the past 3 months, but it's also taken a little bit of a dip off of its highs. It looks like Bitcoin was the main one, though. Although I did see that, I think it was Puerto Rico or whatever that country is that ended up buying up a bunch of Bitcoin. Good morning, Zach Taylor and Francis. What's up? What's up, guys? And Silver says, I've been seeing this coming from a far line and sand being drawn. Americans versus anti-Americans fight coming. We'll see. And what do you think of the Shiba Inu? Well, let's take a peek at it. It looks like it's down also quite a bit. So it's fallen or followed suit with Bitcoin. It's also been trending down. Not the biggest surprise in the world, right? It was already on a pretty steady downtrend. It doesn't necessarily surprise me to see that we just bumped up very temporarily to potentially trick some additional buyers into getting in at those elevated prices and then continued to fall. So that doesn't really surprise me too much. I was not buying Shiba Inu at these prices. I think I sold most of mine already. I still have just a little bit, just like 100 or 200 bucks worth of Shiba Inu, but I'll just hold on to that, just like I hold on to some Dogecoin still, because you never know. So we'll see what happens with them. And good morning, Daisy Colmer. It's very hard to see the media talking about DWAC and DWACW. Yeah, I mean, are they discussing it? I wasn't aware. But yeah, cryptos are going crazy at the very least, and so is DWAC. I will point that out. DWAC up pretty big earlier in the pre-market, at least. It's fallen a little bit, but it's still up much higher than it was. It closed the day around 44 and now it's around 47, so about a $3 gain right there. So we'll see what happens with it over the course of today once some real volume kicks in on the first couple of bars of the day. We'll see where it goes. Hopefully this will be an end to the bloodshed that we've seen in the markets. Hopefully the stock crash will cease to continue today. That's my hope. But there is still quite a bit left in December. A lot of time for people to be tax loss harvesting. So it would not surprise me to see us continue this fall all the way through December potentially, and then maybe near the end of the year, maybe at Christmas time, we could start to see some buying pick back up. Just as people are at peak fear, as people have really sold most of their positions, a lot of the institutions might then try to skyrocket stocks and make it unaffordable for people to get back in to the same share counts they were in prior. But we'll see. We'll see what happens with it. It's just a suspicion of mine. So good morning, Shadow Girl. And Hero says, Remark Holdings receives $30 million of debt financing from Mudrick Capital. So let's see what happened to Mark stock, M-A-R-K. It looks like maybe this news just came out and they have bumped up a little bit. They were at 106 before, now they're at 110. So let's see. Yeah, this news just came out at 6 minutes ago, and they've already started moving up on it. We'll see where they end up. It looks like they bounced up to 115 off that news, and now they're at 110. So we'll see how much of an impact that news has on them. Daisy Colmer says, True Social starts to get fundraising from small cash from $16 to more. Rocky Mountain Gobbler says, what price do you expect CFVI for today, Rob? Look into your crystal, my crystal orb. We'll see. We'll see. I mean, price targets are tough. We'll pull up CFVI for a second here in the main chart right there. I know this bottom right chart is kind of tough to see with the face cam going, but I mean, to be fair, we have made new highs just earlier in the pre-market today. So, I mean, we'll see what happens. Let's see. Cantor confirms to Benzinga. CEO Howard Lutnick earlier commented Digital World Acquisition SPAC partner True Social is going to pay CF Acquisition Corp's merger partner Rumble for distribution and other services. So, we'll see how much more volume we can get with it once the actual trading day starts, once this news really begins to break out, once more people become aware of it. I could definitely see us getting higher than the highs that we've been at of 16. I mean, DWAC, well, let's take a peek actually at the market cap of CFVI, and let's try to get a guesstimate going of how high it could get. There's no guarantee that it will. It could obviously just, as the trading day begins, could falter away. A lot of stocks right now have not been doing too great. SPY's, let's see, it's doing okay. It ended up moving up towards the end of Friday, and then hasn't done too poorly in the after hours or pre-market. It's not been great, but we'll see what happens with the market. So CFVI, let's pull that up, not CF. There we go. So CFVI, market cap of 454 million. So that could definitely get a little bit bigger, right? 454 million is not that big of a market cap. DWAC is about 3 or 4 times that. So we could definitely see CFVI going higher. Although I believe that market cap is yet to be updated for the current price of it. So that's actually probably the price or the market cap when this thing was around 11 or 12 bucks. So it's a little bit higher than that. I could see us breaking above highs though with the volume that we could get today in the trading day. I don't know how high will end. We'll see. I mean, the markets are pretty bloody at the moment. Everything's kind of getting taken down with that, but to be fair, nobody really needs to tax loss harvest on CFVI. That's a big concern for a lot of people, the tax loss harvesting. A lot of stocks that people are down on, they're selling towards the end of the year. This really just started being traded a couple of days ago. So actually, at the moment, there's no losses on it, really, especially where it's trading at now. I mean, maybe if you bought in the very early morning at 16 bucks, you'd be down a little bit since it's at 14 now. But I'm not too worried about people tax loss harvesting CFVI. It could break the highs, but once again, the markets are bloody. People might be looking for more risk off. They maybe made, their 10, 20, 30% profit over the weekend, and they'd be looking to sell once they see it at this price. So we'll see. We'll see what happens with it. And Kitchener Leslie says, I think this will be a rewarding week. I hope it is. I hope it is, but you never know. I mean, we still got a couple weeks left in December. A lot of weeks left for people to continue selling their stocks, to continue taking a tax loss on a lot of their holdings, and for institutions to keep pushing these things down, making retail more and more fearful of holding them. So I think that really what we're looking at is a situation where retail is getting getting scared away from a lot of these stocks. I think that institutions are probably going to be grabbing them up, especially a lot of the more promising stocks that are likely to do well over the next couple of weeks and months, or really months and years, right? I think institutions are looking to grab a lot of these stocks cheap. I mean, look at Sundial. It's never been this cheap since the big pump up, and legalization and all of these catalysts have never been closer to coming to fruition. I think we could be looking at a big rebound come 2022. Whenever this month ends, whenever this bloodshed ends, I think that it's probably going to be a very swift recovery. But we'll see. We'll see. That's why I'm not really selling most of my holdings that I think could really pop back, because to tax loss harvest, you have to stop holding those stocks for, I believe it's 30 days. 30 days that you have to not buy back into those stocks for. So some of them I will sell, but a lot of the ones that I really have a lot of conviction in, like Sundial especially. I'm not even at a loss on Sundial because I did buy in to Sundial, I think, at 19 cents originally. So I couldn't even tax loss harvest Sundial if I wanted to. But I have sold some of my mining companies, right? Some of the metals. I've sold some of those and kind of consolidated those into different mining stocks. Because that's not against the rules, right? If you're tax loss harvesting, you can sell some of your losers in a certain industry and buy other stocks in that industry, and that doesn't count for tax loss harvesting purposes, right? You can still claim the losses. If you sell, say, we'll take a peek at two of the miners, right? I haven't sold either of these, actually. These are two that I like. But Kinross Gold, KGC, you could sell that one and then buy Barrick Gold. And you could still claim the loss on KGC, even if you bought into a different gold mining stock, even though they're both likely to go up around the same time. As long as the price of gold rises, then the price of both of those stocks should rise as well. So that is a strategy you can take, just buying back similar stocks. And it is my understanding, if you guys are in crypto, I believe that you don't have to worry about the wash sale rule with crypto. So I'm pretty sure that if you have any loss on crypto, and let me find an article on this. Let me find an article, because I was reading an article about it, and I don't want to give you guys false information, but let's see. I'm pretty sure, though, that the wash sale rule does not apply to crypto, because crypto isn't, it's not a security. So let's see, here we go. Crypto and the wash sale rule. For those of you who don't know, the wash sale rule is essentially saying that when you're trying to tax loss harvest, right, when you're trying to sell a stock for a loss to claim it on your taxes against your gains that year, you can't buy the stock back, the same stock back within 30 days. Otherwise, you can't write off the loss, because they don't want people just selling their stocks for a loss, buying them back the next minute, and claiming the loss on their taxes. But with crypto, they escape one rule that applies solely to financial securities, the wash sale rule. At least that's what this article is saying. So you experience a wash sale when you sell or trade a security at a loss and then buy it or a substantially similar security back after a short period of time. So I don't believe that applies to buying similar companies, but if you were to say buy the warrants for a stock that you sell, then I'm pretty sure that would still apply to the wash sale. I think that's what they mean by substantially similar security. Potentially, that's what they mean. Maybe they just mean a different class of the common stock. But I think that, this article is basically, I was reading it earlier, and it said that crypto is not applicable to that rule, right? That rule doesn't apply to crypto. So if you guys do have any losses in crypto, then potentially you could sell them and then buy them back the next minute and claim a little loss on your taxes if you have other stocks that are gainers, right? If you've sold some stocks for a gain, then you can potentially do that. And it is about that time. It's 9:14, so I'm taking a look at the concurrent viewers that we've got. We've got 63 viewers and 23 likes. We could potentially get that up to 40. If only, even if a quarter of the people hit the like button, we can get that up to 40 likes. We only need 17 more, so we'll see if we can do it. It'll be appreciated. It does help to get some additional people in here. And Daisy Colmer says, if unrealized capital gains would be taxable, if the new rule would be passed, the market would be bloody, being combined together as gain or loss under tax law currency. Are you talking about for crypto? Yeah, I think they are considering potentially a new rule to try to get the wash sale rule to apply to it, but that probably wouldn't be a good idea. I'd rather see less rules like that, less regulation in the markets. That would probably be good. At Acorn Stocks, some still thinking about it. We'll see. So we're up to 36 likes. We only need 4 more to get to that goal. If anyone wants to be one of the last 4, then thank you. Potentially we could do it. If 4 more people want to help out by hitting that like button. It looks like CFVI is taking an early morning dip right before the market's open. It's dipping down below 14. We're going to see if that holds. Looks like DWAC continuing this little downtrend. We'll see where it consolidates. If it bounces off of 47, it looks like it has done that before in the pre-market already. It's bounced off of 47, so we'll see if it can do it again. Sundial bouncing off of 55. We'll see what happens with that one. And NAKD, I did want to check on. Also around 55, right below 55. So we'll see what happens with it. And we did get to 40 likes. Thank you guys very much. There we go. So we'll see. We'll see what happens on the first bar. It's either going to be, in my opinion, it's either going to be very red or very green. My guess, though, is that we'll probably see a red day today. Maybe not today necessarily, but over the next rest of this month, I would probably expect to see some more red. That's my feeling, at least. I'm expecting a little bit more pain. I don't think we've gotten a peak fear yet. Looking at the SPY, we certainly have further to fall. We really haven't fallen that much. I mean, we're where we got to a couple of months ago. It looks like we might even be using this old peak as a little bit of support on SPY. Around 450, it looks like we might be using that as well. But if we can break through 450, I mean, next support looks like maybe 430. So we could definitely see some more pain towards the end of the year. It would not surprise me to see institutions trying to scare retail out of stocks. Retail, a lot of people in retail have only gotten involved in the stock market the past year or so. Right after COVID hit, they got involved during this massive upshoot. They've not actually experienced a big dip in stock price yet, a lot of people at least. That technically applies to the past several years, right? You look back 5 years ago, and it's kind of a similar story on this bottom left chart of SPY right here. It's pretty much a solid uptrend other than when COVID hit. I mean, there are a couple of times when you ended up dipping, but those weren't really major dips. If you look back at the past, at the max time frame that we can see, the markets have been good to us for multiple decades, really. It's not since the 2000s that we saw an entire year, since the early 2000s that we saw an entire year, since 2008, 2009, when we really saw like a dip go. Pretty much all of 2008, we were just moving down in 2008. And then 2009, we did begin to recover. But it's been a while since we've had a real recession. And then, of course, the tech bubble, we moved down for several years stock-wise and during the tech bubble. So, I mean, people are used to these little dips. I mean, you're hearing people talk about how, you got to buy the dip and it's pretty much over. But we've done this dip for about half of a month. So we started on November 22nd. That was the first real day of the dip. That's when we made our all-time highs on SPY. And now it's, about 10 days after, maybe 11 days after, and people are hoping that this is the bottom of the dip. I mean, it could certainly go on for at least the rest of the month, if not a couple of months. I don't think it will go on for a couple of months. I think we printed a whole lot of money during 2020 and 2021 even. And that much money circulating in the system is probably going to help prop stocks up at a much higher price than they've been propped up in the past. So I don't expect too long of a dip, but 10 or 11 days, that's nothing. I could definitely see us going the rest of the month. It would make sense. We haven't had a big dip in a while. I could definitely see us moving down for the next couple of weeks at least, right? At least the rest of December when people are tax loss harvesting there. It's only getting worse. More and more people are down on their money every day that we continue to fall, and more people may then want to sell their stocks for a loss to offset some of the gains they got earlier in the year. So we'll see. We'll see what happens with it. Hopefully there's not too much more pain, but it would not surprise me at all to see that. I am actually in a small short position on the market, right? I'm shorting the market a little bit, so I did cover some of my short position yesterday because you never know, right? Looking at the past year, the markets have been pretty good to us. I don't necessarily expect us to have a massive crash, right? I don't think we'll have a massive crash, but this downturn could last for a little bit longer. That's what I'm thinking. But we did get pretty darn low on Friday, so I ended up closing out about half of my short positions on the market. And the way I was shorting those was I was in SQQQ, and I think it's SPXU. I'm pretty sure that's it. Yeah, there we go, SPXU. So shorting the S&P 500, and then the SQQQ is shorting some of the bigger tech companies in the S&P as well. So that's what I've been up to. I made a little bit of money on both of those. Not the largest positions in the world. Just something to hedge against this market downturn a little bit. So I have covered some of them. If they ended up being, getting back to my break evens, then maybe I would assume the crash is done, and I would then cover those positions. But they have not yet, and I don't expect they will for a couple more days or weeks at least. Right? I think that we could probably move a little bit lower in the markets, and that's painful for a lot of people to hear, right? Because you see this little dip in the SPY, and it's actually a very small dip percentage-wise for the SPY. In fact, we can draw it right here and figure out how much of a dip the S&P has gone through. but it really isn't that much for the SPY. But most people aren't just invested in the SPY. They're invested in some riskier stocks. So the SPY has dropped about 5%. So not even 5% really. Maybe 5% if you go from the exact peak to the exact pit of this drop. Maybe it's 5%, but about 4.5% is what it's looking like. A lot of stocks in the S&P have dropped on average. But a lot of retail is in riskier plays that have dropped 10, 20, 30, 40%, especially when you look at IWM. The Russell's 2000, it's dropped quite a bit actually. The Russell's has dropped quite a bit, and this is tracking smaller market cap stocks, and it's not even the smallest market caps, some of the really risky ones that retail is in big time. This has fallen about 12.7% on average, and that's still some of the more reputable, larger companies. So retail has definitely been suffering quite a bit since this whole market crash began, but I think it's going to be a pretty big gain that we see come 2022 when that actually begins. So we've got some comments coming in. Snowpiercer, was Mandingo in that? I watched Snowpiercer. That was a good one. I think what's his face? The guy who plays Captain America. How am I forgetting his name? I don't know, but he's the guy who plays Captain America. I think he was in Snowpiercer. I can't believe I'm forgetting his name. He's a popular guy. Let me pull this up. Yeah, I'm going to try to remember, but no. Here we go. Chris Evans. Chris Evans. That's the guy. So, Chris Evans. And Zach Taylor says, hey, Rob, can you take a look at HITI news and explain what it means to me? I'm like 5. All right, we'll take a peek at HITI. I haven't heard of the HITI news, but let's see what it looks like. Okay, so high tide. All right. All right. So let's pull up the Yahoo Finance on it. Let's see what this is. High Tide, leading retail-focused cannabis company with brick-and-mortar as well as a global e-commerce asset, is pleased to announce has established an at-the-market equity offering program that allows the company to issue up to $40 million of common shares from Treasury to the public from time to time at the company's discretion and subject to regulatory requirements. So I think they're just doing a stock offering. I'm pretty sure that came out, 6 minutes ago, this news? So let's see what HITI is doing off of this. If they're going up or down. Probably, my guess would be down. Typically, when you see a stock offering, you see the shares move down, but it looks like there's just been some volatility with it. Looks like they moved down, then they moved up. Now they're sitting right where they were before at 857. We haven't had a bar since, so we'll see. But it looks like they're selling 40 million worth of stock to raise some additional capital. That's what it looks. At least that's what this Yahoo Finance article is saying. So we'll see. And it's not necessarily saying that they'll sell it all at once. It says that they'll sell it from time to time. So they have the option to sell up to 40 million worth of shares. Kind of the opposite of what Sundial said they would do with their 100 million. Sundial said that they would, from time to time, be buying up 100 million worth. And it looks like High Tide is selling from time to time 40 million worth. So all in all, probably a good thing over the long term to have them raise some additional capital. Now might not be the most opportune time, seeing that these pot stocks have fallen quite a bit. So now is not necessarily the most opportune time. Ideally, they would have been doing it while it was pumping, but it's probably good that they get some extra capital. And you'd rather that than them go bankrupt, right? So that's not bad, not ideal in the short term, right? Obviously, there's going to be some market pain anyway, so not the worst situation for them. But all right, guys, there's 6 minutes left. I will be right back. Quick bathroom break, so I hopefully won't have to do it during the actual market hours, but I'll be right back, so just sit tight. All right, I am back. I wanted to beat the market, so that was quick. There we go. Let's see. Silver says, anyone sick of the freezing climate with deep pockets is getting in. I'm not sure what that refers to. Oh, Silver says, and yep, Mr. Wonderful from Shark Tank. That interests me. So what are you guys talking about now? I know Mr. Wonderful from Shark Tank is investing in one of my favorite stocks, MNMD. This is a psychedelic testing company, right? So they're doing a couple clinical trials, or a bunch of clinical trials with psychedelic medicines and experiential therapies. So they have been suffering quite a bit, as a lot of these growth stocks have over the past couple of months. They did pretty good earlier in the year. They got up to highs of 577. I think this was on them getting listed on Robinhood. So they were listed on Robinhood, I think, when they became part of the NASDAQ. They pumped up quite a bit on that, but since have fallen a bit. So I think that potentially they, along with most of these other growth stocks, are getting pushed down, potentially so that big institutions can get in, scare some of retail out. We'll see what happens with this stock, though. But Mr. Wonderful from Shark Tank, Kevin O'Leary, is invested in this one. So it's cool stuff. He believes in it for sure. Let's see, though. Chris Evans played in the film. The series, though, was a mile or kilometers better. Really, I watched the first episode of the show, Snowpiercer. I didn't like it as much as the movie. I only watched the first episode, though. So who knows? Maybe it was better. But it didn't interest me too much. Okay. Now, what do we have down here initially? We had, well, CFVI. Maybe we'll pull up CFVI right here just to see what's going on with it. Because it is an interesting one. It does have some pump potential right there. And we'll pull up SPY also, just to keep an eye on the markets. We'll see what's going on with those. Kitchen Leslie, Rob, we were speculating other players who might be throwing in with Trump. I was thinking Dave Portnoy from Barstool Sports. Could be. I don't follow Barstool Sports, but every now and then one of my friends will send me a post that they have on Instagram. And Ludwig says, hey, Rob, Sundial doesn't look good. Still hold low. Patience is key. I agree. I think that a lot of these stocks are getting pushed down towards the end of the year. DWAC having a nice rebound off of 46 up to 49 right before the market opened. This could be a very interesting one. Both DWAC and CFVI moving up pretty big. Ludwig, same with AMC. I'll pull that up over the market. AMC, it looks like, okay, I think same with AMC. You're talking about same with, it's not looking good, but let's still hold. Yeah, I see that. I'm not in AMC. Maybe if I look into it towards the end of the month and it's gotten significantly cheaper, I might consider a little position in AMC. I know a lot of institutions actually hold some AMC. Potentially they're in it for the short squeeze as well. But we'll see. Maybe I'll get into AMC towards the end of the year. If it gets cheaper, then I could definitely see it pumping again. I mean, it looks like 20 was around where we pumped up to the last time. So maybe 20 would be a good place if we could get that low. We got to 25 last dip on Friday, so we'll see if we can get down to 20. Maybe I would buy some AMC if that was the case. And Silver says, 10-day watch of DWAC. Let's see the 10-day. Yeah, it's looking pretty good. It's looking pretty good on the 10-day. It looks like we may have finished our bounce off of it. Looks like 38 was a pretty good support for us. So a couple of times we bounced off of 38. So it's not looking bad. Not looking bad at all for DWAC on the 10-day chart. Let's see what this first bar is going to be. We're going to get it in 8 seconds, guys. We're going to see what happens if these stocks end up pumping or crashing. My expectation is we probably won't be doing great today for a lot of stocks, but some like DWAC, CFVI, ones with news, they could be doing better than others. We'll see. Sundial looks like it's not doing too shabby, although it's down in the after hours. Now it's moving up. Up to 56. So we'll see. A lot of these stocks got some green bars. AMC even got a little green bar right there. Sundial getting pushed back down. It was a nice green bar for a second. DWAC too. It looks like all of these started off as green bars. Now they're getting pushed down. We'll see what happens to it. And Silver's throwing out some bells. So yeah, the opening bell has rung. We'll see what happens. I used to have an annoying opening bell that would play whenever the markets actually rang. If I had TD Ameritrade open, had to turn that off. That was way too annoying, way too loud. I like the bell being silent much better. So we'll get that volume chart out of the way. Let's see. is crypto doing anything crazy now that stocks are trading? It really shouldn't affect the prices of crypto too much, but it looks like the cryptos for the most part are still down. Although the ones that were pumping the most are down the most. Crypto.com coin down 10%. Polygon down 13%. CFVI moving up. It looks like we might be making those new highs. Might be making new highs during this trading day. We'll see. DWAC taking a little bit of a tumble back down to 47, giving up some of the gains it got right before the market opened. So is Sundial on a massive red bar on substantially lower volume than what they had the bar prior, but it's only halfway done. So we'll see what happens with Sundial. And AMC, we're on the 5-minute bar, so let's go to the 1-minute chart and see what's going on with it. Okay. Man, guys, I swear I get way too many emails from these brokerage accounts. I have 6 brokerage accounts, and boy, do they like to send emails about my statement being ready. That is, I mean, that is the most useless email I've ever gotten. I get way too many. Really, I hate all those emails, and I don't think you can unsubscribe from them either. I think that there might be some regulation that they have to send you your statement every now and then. I thought it was a good idea opening up 6 brokerage accounts. I use them for different things, but it's kind of annoying, actually, at this point. I wish I hadn't done it. Now I can't. I mean, I guess I could close them, but I don't want to do it. So I guess I just have to accept the emails, but don't do it. Don't open up 6 brokerage accounts. Not financial advice. I'm not telling you not to financially. I'm just saying from an email perspective, if you don't like your phone buzzing several times a day with your statements, then don't do it. But it's looking like a mixed bag today. A lot of the stocks are starting to move down. But CFVI, once again, doing pretty good, up 25% since close. So we'll see. We'll see what happens to CFVI. It's up 27% now, so it's been doing pretty good. It would not surprise me to see us get above 16 and make new highs. I think some people want to see it. We're up at 1550 just about right now, up 30% on the day. But pretty much everything else is suffering. It looks like DWAC might be starting a little bit of a reversal, though. We'll have to see what happens with it. But let me pull up. Okay. It looks like Ortex updated itself. It's interesting. All right. Okay. So, yeah, Ortex certainly got a little bit of an update. I'll have to learn how to use this, where the heck the short interest is, but okay. I just don't want to see the pop-ups that they're giving me. But all right, here we go. So, let's find the estimated short interest on Ortex. Boy, I wish that line was... There we go. There we go. So, DWAC short interest. We're pulling that up. It looks like we've gotten a little bit of an update to the UI on Ortex, but that's okay. That actually makes it look a little bit better, I think. It enlarged some of these numbers. So, the short interest change on DWAC pretty much staying the same. Currently, it's got about 10% of its free float short, 2.98 million shares, so not much has changed short interest-wise. Some additional shorts have come in ever since it started moving down to the low 40s. But we'll see if we can squeeze some of them out once DWAC starts moving up. But I do suspect there could be some more pain before that happens. Now let's take a peek. I'm curious about Sundial. Let's see what Sundial shorts are doing. Okay, so Sundial shorts, it looks like they've increased their positions too. Just a bit today, but probably on Fridays when most of them came in after or later in the day. Short interest change up 0.3% today, but we're up to 15% of the free float, 309 million shares. So although some of the shorts did end up closing their positions when Sundial started dipping, looks like some are getting back in. So some shorts are expecting this market pain to continue for a while. Going to try to keep pushing Sundial down. We'll see what happens with it, though. Let me pull up CFVI stock. And Jay, good morning. Quinton, what's up, man? What's up? Some shorts are stupid, though. Yeah, some shorts don't make any sense. Some shorts are just shorting just for fun. But it looks like some of the Sundial shorts, if they cover now, then they're making a little profit, right? Sundial is now pushing down some new lows. Look, I mean, hey, if we can get Sundial for 5 cents a share, then I'll take up a whole lot of Sundial. I'll take a whole lot of Sundial if we can get it down that low. I don't think we'll get that low, but the cheaper the better, at least in the short term, I think, for buying up more before 2022. But CFVI, if you're looking at Google Trends on CFVI, you can see that we have surpassed even the IPO hype, or at least the announcement of, not necessarily an IPO, but the merger with the SPAC. we have surpassed that volume on Google Trends. So more people are searching for CFVI now than ever, at least as of 4 a.m. this morning. But we are trending up still, so we'll see if we can beat that out. CFVI is up 24% on the day. We'll see if we can end up making new highs. And Rich M says, hit the like button for Rob. I would appreciate that. We're up to 58 likes. If anyone wants to be the last 2 people to get us up to 60, that would be nice. And good morning, Rico. What's up, man? What's up? AMC is dipping down to 27, down 5%. It looks like this blood in the blood in the markets is continuing. We're going to see a lot more bleeding, like I was expecting for the rest. Potentially, not necessarily the rest of December, but at least for this part of December, we're seeing some more blood. We are making new lows on a lot of these stocks, Sundial included. So Sundial's going down. It looks like DWAC bleeding a little bit. We'll see. We'll see how long this continues. I'm thinking probably mid to late December is when we could see this stop. And it looks like CFVI dipping huge on this bar, down from 1494 to 1377. No halts there. No one bothered to halt it to stop it from falling. They only seem to do that when stocks go up too much. At least that's what we've seen in the past. Oh well. But, honestly, I would rather them not halt it at all than halt it when it's going down. I think the halts are almost too much of a manipulation in and of themselves. Like, if people are buying up the stock and there's not enough shares, let the price go up and we'll see some crazy volatility and some traders can make some money. That's what I would prefer. But the halts, sometimes they're nice to see if the markets are really crashing, and sometimes you appreciate them, but most of the time, they're not my favorite thing. Lucid is really taking a tumble. Lucid down huge in the pre-market, down 16%. It looks like we're hitting up this $40 support/resistance level. It's acted as both in the past. It's acted as a resistance. Now it's acting as a support. We'll see if that can actually hold us. The last time we bounced off of it, it certainly bounced us up to new highs, but now the markets are so bloody loose, it's going down too. And Steve Potts, good day to all. Sundial is killing me. I need to sell when I was up and buy back at the dip. Yeah, that wouldn't have been a bad plan. You certainly could have made some money that way. I'm not too unhappy with this dip on Sundial, though. I think I'm not too worried about Sundial next year. I think a lot of people are selling it. It's getting a little oversold at this point. I'm looking at the options. They, I think, should be a little bit more expensive at this point regarding how much Sundial has fell. But I could always consider selling some more options or buying back the stock. It's so darn cheap at this point. Or not buying back the stock, but just buying up some more shares of it. It's getting really darn cheap. Let's see the market cap on Sundial. I mean, they do have quite a bit of cash on hand. So there is just a certain valuation that I think they should be at. I think they have $1.2 billion worth of cash and marketable securities, but I will say some of those securities may be down in value as well, since the markets have been falling over the past couple of days. So Sundial currently at $1.1 billion market cap. Pretty darn low compared to where it has been in the past. And they've never been in a better position fundamentally. I mean, you saw the earnings call and what it did to their price. They ended up moving up pretty big on this earnings call. They were profitable. They're doing a share buyback for $100 million. They've got a bunch of... they've got the Alcana merger going through potentially later this month, maybe early in 2022. They've got the Sunstream IPO and legalization likely on the way. I mean, there seems to be a lot going well for Sundial, yet they've never been lower. Well, they have been, but not since this most recent pump. So I think this is just institutions making Sundial a really good deal for them. We'll see how much lower it can go. I mean, there are a significant amount of shorts in it. So I think that the pump up will probably be pretty explosive when we actually get it. Obviously, we'll probably have to wait a bit for potentially the end of the year when the markets stop bleeding in general, but we'll see. Stand-up says Sundial is looking cheap. It certainly does. Quentin White, I'm bag holding, but I'm going to buy more this Friday. I'm going to probably buy some more, potentially later today. We'll see how low it can get. Yeah, I see you're saying on Friday. Over the course of the week, we'll see how low this thing gets. I mean, if it goes below 50 cents, then that's just too good of a buy. We're not too close to it yet, but we're still a couple cents away. But I mean, I wouldn't have expected to see Sundial this cheap. I would have thought way too many people would be buying up. I bought some up on Friday. I think it was Friday or Thursday, one of the days. I bought some up for around 50-something cents, but now it's even lower, so might have to get some more. All right. And Lucid's still not doing too good. It looks like it did break below that $40 support level, so Looks like nothing can stop this market bleeding. Let's see, what are the... Even gold and silver are down. Gold and silver are down. The market, so QQQ is dropping pretty significantly. SPY, it looks like also, we'll pull up SPY here, looks like everything, as soon as the markets opened, just started tanking. I mean, they had one green bar, both of them, and then just red. And over the past 4 minutes, they've been starting to move back up, but it's not looking good. And Sub-Zero says, I sell put 100x at 50 cents. Yeah, not bad. That's what I did on Sundial. I certainly like, I mean, now I'm actually down a little bit on that because Sundial has gone down even more. I think I sold them for 18 cents or something. Now they're at 21 cents you could sell them for, so maybe I'll have to sell some more. And Sweezy Drip says, Tesla is down. Yeah, it doesn't surprise me. Everything's down right now. Markets are crashing. Yeah, Tesla down below 1,000. It looks like it opened right above 1,000 today, and now it's down below 1,000. I mean, we're getting some pretty sweet deals later this month. I think we're already getting some pretty sweet deals. Tesla is still pretty darn high. It was only recently that they got up above 1,000. So we'll see how low we can get Tesla at. Nicholas Morello, I'm going to be sick. About to sell everything. Oh, I don't know, Nick. I mean, you can if you want. Obviously, you know, I'm not giving financial advice, but I'm looking at this like it's a great buying opportunity for 2022. I mean, obviously, you know, I think we've got a little further to go. So I'm not actually buying it right now at this moment, but I'm looking at this like these things are getting really cheap. Some of them, especially Sundial, is getting crazy cheap. But yeah, I'm not too worried about this big dip. I mean, we've seen it in the past before. I think this is exactly what institutions want. I think if you're looking at, I'll pull up the SPY and show you guys again. For those of you who are new to the stream over the past couple minutes, I'll show you that a lot of retail investors who are new to the markets, if you look over the past years, a lot of people got involved right after COVID, and all they've known is the market's moving up pretty much, never having significant dips. Now, the market is starting to experience a somewhat significant dip, right? This isn't that bad for the S&P. It's not even down 5% at this point from the highs. It's down close, but not even down 5%. But a lot of the smaller market caps, if you look at IWM, the Russells, this tracks smaller market caps, you can see it is a more significant dip. But, you know, even this is tracking some of the bigger, smaller market caps, right? This isn't the Sundials of the world or the NAKDs of the world, right? This is larger, somewhat more reputable, larger market cap companies. Still, smaller market caps regarding what's in the S&P 500, but a lot of stocks have not been to these lows since people have been investing, which really only happened about a year ago, is when a lot of people started getting involved in the market, and they haven't seen a significant dip yet. And I think institutions are banking on that. I think a lot of institutions are going to try to scoop up shares as soon as they scare out enough retailers, right? I think they want to see a really bloody market towards the end of the year. They want to push things down because they don't necessarily care over the short term where these things go. If they lose some money on their long positions, they want to scoop up more shares so that next year their gains can be even bigger. And obviously that doesn't have to be the case. We could definitely see, I mean, it's not impossible to see a crash that moves us down 80% and then stocks never recover and they stay down forever. It's not impossible, but it's never happened before. I mean, over the long term, stocks tend to go up. If you look at the max chart we've got, we'll take a peek at the SPY at the max time frame that we've got, and you can see on the max time frame, this is covering decades here, stocks tend to move up pretty big, right? The SPY started at 42, it moved up to 145, down to 88, up to 151, down to 74. Granted, you know, we haven't seen that kind of a thing for years and years and years. We could definitely see it, but over the long term, stocks do tend to move up. Now, honestly, this chart makes the market look pretty frothy, right? It makes the market look like there's a real chance it's going to crash pretty big because we haven't seen a big crash in so long. But we also haven't had this much money in the system in a long time, or ever, really. It's unprecedented for this much money to be in the system. Though I will point out a somewhat scary statistic. Very scary statistic, actually. And I think we can see it right here. Very scary stuff, actually, what we're looking at with this. So, unfortunately, this is tracking the margin debt that people are in. Debt balances and customer securities margin accounts. So, starting in January this year, you know, talk about margin. I don't know if you guys are using margin. I don't use margin too often. I'm not using any right now, but you can see the margin debt that people are in. Starting in January, we were close we're in the low or in the high 700 billion, or no, 700 billion dollars worth of margin debt. So these numbers are shown in millions of dollars. So 700,000 is actually closer to hundreds of billions, right? So $798 billion of margin debt at the beginning of the year, and it's just been going up and up. You can see now we're at 935 as of October 21st. Maybe we're in some more now, but we were getting close to $1 trillion worth of margin debt in people's accounts. I mean, I don't know if we've ever seen numbers this high, at least not this year we haven't. And I would assume that, since there's more cash in the system, we're in more margin debt also. But we're seeing extremely high margin debt. October 21st is the last day that they reported it on, but extremely high margin debt, almost $1 trillion worth of margin debt. And that could definitely be contributing to the pain that we're seeing, right? As stocks move down quite a bit, some people are getting margin called and are being forced to sell their stocks. So, towards the end of this month especially, since we're in that much margin debt, if stocks continue to fall, it could really be a very bloody end of the month for market pain-wise, right? I could definitely see us falling quite a bit more just because so many people are in margin debt and could be getting margin called at the end of the year. We'll obviously have to see what happens. I think this is tracking. This isn't tracking institutions. This is tracking retail traders, I believe. So debt balances in customer security margin accounts. So I think that's definitely not institutions. Otherwise, I think it would be a lot more probably. But I believe this is access to just retail traders, and whales included, right? Anyone who's not an institution, I'm pretty sure. But it looks like we're in about $1 trillion. Maybe it is institutions too, but about $1 trillion in margin debt. So definitely some of that could be getting trimmed away. We could definitely see some big pitfalls towards the end of the month as some people get really scared and start to see very red days. It looks like we haven't actually gotten that much volume yet today on SPY. Granted, we've only been trading for about 17 minutes, but we'll see what happens towards the end of the month. It looks like we made a nice V-shaped recovery. It could be the end of the market crash. Probably not, but it could be the end. I'm thinking it wouldn't be, but maybe it will be. We'll see. Sundial is also making little V. Everything seems to be making little V. Tesla included. SPY on the second chart that we're watching it on. I don't know why we're doing that. We'll pull up DWAC here. All right, DWAC, everything except DWAC is making a nice V shape. It looks like it started doing that. So Sub-Zero says, can you explain more about margin calls? What happens to your stock? How many days before they force to sell your stock? So when you get a margin call, I believe they give you probably that day at least, if not 3 days. Let me see, actually, because I've never gotten one myself before. So let's see what the actual time is that you have to call to sell your stock. Because I know they give you the chance initially, at least most of the time, unless your stocks are really crashing, probably. But I think that, let's see. So let's pull this up, and we'll figure out margin calls together. But I think they pretty much always give you the chance to decide what stocks you want to sell first, if you want to, or if you just want to put more money in, because obviously you can always put more money in. And I think, depending on your brokerage, you can have different levels of margin, but I think that a pretty standard amount is if your capital falls below 50% of your account value. Like if you have, $50,000 worth of your money in the account and you have $100,000 worth of stock, including what you've bought on margin, that's when you would start to get the margin call, I'm pretty sure. No, it's 25%. It's 25%. So you can initially, if you have $50,000, buy $100,000 worth of stock total. And then if your account value falls below 25% of the total value of the securities, so then if you only had $25,000 worth of your own equity in that account, in that $100,000 account, that's when you get the margin call. And let's see exactly when it's triggered. So let's see. So okay, if a margin call is not met, then a brokerage may close out any open positions to bring the account back up to the minimum value. They may be able to do this without the investor's approval. Yep. Let's see. Does it say? I don't know if it says exactly when. Let's see. How can a margin call? Margin call must be satisfied immediately and without any delay, although some brokerages may give you 2 to 5 days to meet the margin call. Okay, so you may, so you probably have to meet it immediately, obviously, because the stock could continue dropping. That's what I was figuring would be the case, but some brokers may give you 2 to 5 days to meet the margin call. The fine print of a standard margin account agreement will generally state that to satisfy any outstanding margin call, the broker has the right to liquidate any or all securities or other assets held in the margin account at its discretion and without prior notice to the trader. So you actually don't have any time most of the time to do anything about it. Though, if your brokerage is nice to you and they're a good one, they'll probably tell you beforehand, and you can then you can get out yourself. But it looks like you don't have any days technically, because obviously, if a stock is really plummeting, then the broker is worried that you won't have enough money in the account to satisfy. I mean, stocks could drop quite a bit in a day. Some stocks could drop, if they're penny stocks, they could drop 90% in a day, and then there just wouldn't be enough money to keep to even pay back the margin debt. So trader or institutions, the brokerages really don't want that. So at the worst case, if a stock is really plummeting, then you might not have any time to put more money in the account or do whatever. The brokerage might just close out the position without even telling you, it looks like. I mean, they probably do their best to send you an email or a notification on your phone or whatever, but they might have to liquidate it immediately. And, they'll just send out the notification letting you know that's what they're doing. So getting in margin is risky if a stock really starts plummeting. Obviously, you don't want to use it too liberally on some of the riskier stocks if you're worried at all about them plummeting, because you could get called right out and just force liquidated on your positions, and that would not be good. So that's why I tend to not use very much margin at all. I mean, only, if I ever do use margin, it's only a couple $1,000s worth of margin. I definitely don't want to get in the habit of having too much, because, if my account fell to a couple $1,000s, then, I mean, there would be blood in the streets, literally, if the stocks that I was invested in literally fell to only a couple $1,000s worth. If everything would have to fall so much that society would probably have fallen apart at that point. So I'm not too worried. I'll go into a couple $1,000s worth of margin to every now and then if I see an opportunity, but I'll probably try to get out of it pretty darn quickly. So that's what I think about margin. I think it's a nice tool, something to have in your back pocket if you ever see any great opportunities that you need to take advantage of and you don't want to, I think some brokerages have lower instant deposit limits. I think Robinhood initially gives you $1,000. I think mine is higher at this point, but if you don't want to deal with depositing money instantly, if you don't have any money to deposit, if you don't want to move money around brokerage accounts and you need to buy something quick, margin can be a useful tool, but I tend to not use it over the long term. So that's just my opinion on it. And Zach Taylor says Tesla plunges under $1,000 after Reuters reports ongoing SEC probe over defective solar panels. Yeah, that could be, I think it's a potential reason why, but right now it looks like, let's see, where was the Reuters? Yeah, I mean, potentially that Reuters news had something to do with it, but it really looks like, if you take a look at SPY and look at Tesla, it looks like they're following a pretty darn similar pattern right here. I think that maybe it was just Tesla moving with the markets, but the solar panels might have had something to do with it, right? That might be why Tesla's dipping down a little bit more than the overall markets as of right now. So wouldn't surprise me, but yeah, they certainly did dip down. They certainly did dip down below 1,000, and it doesn't look like they're getting back up. They bounced off of $990. So Tesla is having a hard time, as are all stocks, right? All the stocks are moving down. I'm not too worried about it over the long term. I think, ideally, people aren't investing with money they can't afford to lose. I don't need any of the money that I have in the markets. I want it, but I don't need it. So I'm not too worried about it falling. I think that's the best way to do it. It really lets you have a stress-free opinion. I think it's important to have some cash, right? I think you want to have some cash so you don't have to worry about your expenses for the next couple of months, at least. Ideally, you would have some cash around just to deal with those. Hopefully an income of some sort so that you don't have to worry too much about what the markets are doing. But, it allows you to be more stress-free. If you're putting in, your only money, then you get into the position where you really start to feel the pain when the markets are dropping, because that's probably money that you'll need at some point. So not advisable, in my opinion. Obviously, I'm not giving away that financial advice, But in my opinion, it doesn't seem like a smart thing to do, to put in all you've got into the markets. I think having some cash on hand just in case you see some of these market drops, then you're not too worried about it. At least not worried about how you're going to survive, right? You might feel some fear seeing your account value drop a lot, but you're not actually worried about how you're going to get food or shelter the next couple of months. So I think you definitely have to have some balance, and this is probably a good lesson to be learning right now when the markets are moving down so much. It's probably good. I mean, I don't expect this to be the most massive market crash in the world. I don't think it's taking people's accounts down to zero. I don't think there's any real catalyst that's moving this thing down too much, other than worries about the Omicron variant. Tax loss harvesting is going on. Some stocks have gotten a little bit frothy. The markets have been moving up quite a bit. I think some people are just worried about an overall downturn and are selling. But I don't see any huge catalyst that's taking us down for months or years on end. At least not right now. Obviously, the debt is somewhat worrying. There could be an issue with the debt that really wouldn't be good if the United States, couldn't take out any more loans. If the world stopped giving the United States loans, that wouldn't be good. If our money really fell in value, if the dollar stopped becoming worth very much, that would not be good, and that could definitely cause a potential market crash. But overall, I don't think that the markets are moving down for months and months. I think it's probably December, and either the end of December or January. I would expect to see the markets moving back up again, but I could be wrong. The markets might move down for a little bit longer than that, but this is probably a good lesson for a lot of people to realize that stocks don't only go up, right? Stocks can move down too. Even reliable stocks like index funds that track the S&P. So Omicron has common cold genetic material, could be hopeful for a less severe virus in future. Oh, that could be good. That could be good. Yeah, hopefully it won't be very bad for people. That could be nice. And Ryan Tube says, hopefully we're all on here within the middle of 2022 talking about how good the market recovered. Yeah, that's the hope. I think we certainly could. I definitely see good things in the future for a lot of stocks, right? Not necessarily every stock. Some stocks got kind of frothy. Maybe some of the EVs are getting a little frothy. Those, like Tesla, I think Tesla's a good one, and I'm holding it over the long term. I think it might not get back to its highs for a while, though. Looking at the past year, it's gotten pretty darn expensive. I mean, $1,200 is pretty expensive for Tesla. Looking at the market cap, we'll take a peek at it. Looks like they are trading now under $1 trillion market cap and PE ratio of 319. So still a little frothy on Tesla. Obviously, great company. Love Elon Musk. But so let's actually take a peek at the real-time wealth of people. Let's look at this. Let's see what's happened to Elon Musk over the past couple of days and weeks. So Elon, I think last time we were looking at him, was worth over 300 billion. Now he's worth 250 billion. So he's lost quite a bit. And just, it looks like today, maybe, he lost 12 billion. So his worth is certainly falling. His worth is down 4.73% over, I don't know when this was last updated, if this is a daily or weekly change, but Elon Musk is falling quite a bit. So let's take a peek at that. Elon Musk at 253 billion. Jeff Bezos at 193. He's down too. Bernard Arnault and family, 186. He's down 307 million. Bill Gates is finding a way to increase his worth today. He's up 165 million. So good job, Bill Gates. Tyler Mike, Sundial went green. Yeah, it did. It was green at the beginning of the day. Now it's green again. It looks like, let's see what SPY is doing. Is the market done the same thing? Yeah, it has. So Sundial went green with the market. It's down to lows of 53 cents. I was thinking it was a little too cheap. I was very surprised to see it that cheap. Mark Zuckerberg finding a way to increase his wealth today as well. Warren Buffett, too, up $1 billion. He's only at number 9 now. He's almost out of the top 10. It looks like a lot of these guys, probably tech guys, are doing a lot better than Warren Buffett lately. So we'll see what happens with that. But Elon Musk certainly losing quite a bit. I mean, $12 billion in a day. I mean, that's pretty significant. That $12 billion, let's see if we can't find it, is more than the... there we go. So it's more than the 176th wealthiest person in the world. So Elon Musk, in a day, lost more than someone in the top 200 wealthiest people in the world has total, right? This person only has 12 billion, and Elon Musk just lost his entire net worth. That entire person's net worth, Jeff Yoss, he lost his entire net worth in a day, and it hardly even put a dent in what he's got. He still has 253 billion left. So impressive stuff. Impressive stuff for Elon Musk. Let's see. Ryan is saying, hopefully, yeah, we saw that. Hopefully we'll be doing well middle of next year. I expect we will. And Sundial went green. Poor Elon. How will he eat, says Kitchener Leslie. I don't know. Probably not. He won't be eating that much today. He'll probably try to save money on his coffee and all that and take a short shower. Sub-Zero, Sundial is rising. It certainly is. It's up. Well, now it's back down 0.5% on the day. Looks like we topped out exactly where we did last time at $56. Or sorry, I wish it was at $56. We would all be rich, but no, at 57 cents. At 57 cents, it saw a double top right there. We'll see. It's very possible that if the market keeps moving up, Sundial could do the same as well. Hopefully, it will. But you know, I'm expecting probably some more pain over the next couple of days and weeks. We'll see, though. It's not impossible that things could reverse today. It's early December. Maybe the institutions are going to head us off and try to buy in before all the retail investors are. It's very possible that this was enough pain to scare out enough retail. Obviously, the institutions are going to want to beat each other in too. You know, it's not just a them versus us thing. They're also fighting each other, and so is retail to some extent. Some retail traders fight each other, that's for sure. And Silver says, "Uh-oh, internet glitches again for me. They don't like me." Yeah, I guess not. And Silver says the sweet spot is 55 cents for Sundial. Yeah, that is a pretty good price. It looks like that's about halfway between their highs and lows of the day, from 53 to 57. 55 really is the middle of that. So we'll see how long it continues being like this. If they end up breaking out of either 53 or 57, DWAC maybe potentially bouncing off of 43. Looks like they had a big bar taking them down there with a nice big wick, ending up being green. So good stuff. It looks like the markets are deciding what they want to do. The markets are being pretty volatile right now, just bouncing back and forth. We'll see what happens with that. And Tesla, what's going on with Tesla? Looks like they're starting to move back down. Maybe those solar panels are a bigger deal than we thought initially. We'll see. Rivian. It looks like Rivian. Did it get down to 100? Yeah, it got down to $100. Now it's at 105, but it hit 100 at the lows. So we'll see how long it can stay above 100. It would not surprise me to see Rivian moving down further, though. Rivian really seemed frothy to me when they IPO'd and moved up to 179. Should have shorted it. Oh, well. Honestly, buying put options wouldn't have been a bad idea at those prices. Lucid, it looks like, may have started to recover a little bit. They're back up above $40, so good for Lucid. It looks like they've come back with the markets. We'll see what the markets continue to do. Sundial's taking a little bit of a dip at the moment. So Silver says the company will buy back lower at 45 to 50. Potentially they will. They might. The markets will probably continue to bleed, and then we could see Sundial doing their buyback. And Robinhood stock hit all-time low, says Guncat. Let's take a peek at Hood. I ended up selling a put on Hood. So let's see what the puts are selling for. I think I sold it for $6. This is loose, not Hood. So Hood. So the 20, I sold it for around 6. So now it's up between 6 and 7. So they have gotten a little bit more expensive. But it's out for a year out. So I don't expect Hood to be trading below $20 for too long. I think it'll probably come back in a pretty good way. This is cheaper than where it IPO'd at. IPO'd at 38, so they're trading at basically a 50% mark off. So yeah, I don't think that they'll be trading that low for too long. So let's actually see this. There is something I wanted to check on. I can't find it. Oh, well. And Steve Henderson says, Lucid SEC probe. Lucid SEC probe. Let's see what we can find about that. Let's see if there's anything. So Lucid stock tumbles after disclosing subpoena related to SEC investigation. Wow. Wow. All right. We got to pull this up on incognito real quick. For some reason. Okay, here we go. So, Lucid stock tumbles after disclosing subpoena related to SEC investigation. Shares of Lucid Group took a 14.2% dive towards a one-month low in morning trading Monday after the California-based EV maker disclosed that it was subpoenaed by the SEC related to an investigation. The company said in an 8K filing that the SEC requested Lucid to produce certain documents related to the investigation, which Lucid said appears to concern a business combination between the company and a SPAC, Churchill Capital Corp., which took Lucid public, and Ativia Inc., and certain projections and statements. Lucid said it is cooperating fully with the SEC. Lucid stock has rocketed up 107% over the past 3 months, while the SPY has inched up 0.2%. So Lucid is certainly doing pretty good over the past 3 months. So we'll see what happens with this. I mean, it doesn't sound too serious to me. It sounds like the kind of mumbo-jumbo that goes on in the markets all the time, but I'm not too worried about Lucid doing poorly over the long term because of it. I think they'll probably recover in a decent way once this market recovers. It looks like stocks are starting to move back down, making a new low this bar, not on the day, but ever since this most recent V shape that we've been on, we are starting to trend back down this bar. So we'll see. We'll see. And Silver says they're trying to drop stocks to cover their naked shorts. Oh yeah, I bet they are. Let's see, what's Lucid's short interest, actually? I haven't taken a peek at that yet. Okay, it looks like Ortex is frozen. We'll have to refresh the page. I don't know about this new Ortex, guys. Ortex updated, so we'll see if there are any glitches with it. So, Lucid short interest, let's see. So it's actually decently high. It's at 10% of the free float, up 2.8% change today, 59 million shares of Lucid being shorted. So, not the highest utilization, 61%. So there could be more shorts, but you see it's slowly been inching up over the past year. Whoops. So it looks like even more recently, it's actually been decreasing as it really started pumping up. I guess as some of the good news about their vehicle delivery started coming out, some shorts have been getting out of it. But overall, Lucid's short interest has been increasing for a while, so we'll see. I mean, I don't think Lucid's the type to short squeeze. I think it would have to get up pretty darn high. It's already got a pretty large market cap. I don't know if we could squeeze shorts out of Lucid. It probably wouldn't be worth institutions. Institutions would have to be buying it up big to do that. It's got a $67 billion market cap, so that would be tough to do. And already a lot of volume, so shorts could get out pretty easily anytime. All right. Oh, great. TMTG gets information requests from SEC and FINRA. It doesn't surprise me. It looks like, yeah, they're down to 42 on that. So let's see. Okay, update. Here's something, though. There are a couple of things that just came out, 9:45, a little bit ago. So DWAC 8K shows expectation for TMTG total subs to reach 40 million by 2026. And DWAC Corp sees TMTG Group Plus monthly fee and user averaging $9 by 2026. So let's do some math on that. So $9, I believe that's $9 a month. 9 times 40 million. So they'd be getting $360 million in revenue every month. Multiply that by 12. Geez, $4 billion a year is what they're estimating by 2026. So we'll see. I mean, obviously they're going to have to do a good job making the platform, but by 2026, that could be quite a bit. That could be quite a bit of revenue. That's what they're expecting, at least. So we'll see what actually happens with it. Obviously, that's a pretty far out prediction. It's only 2021 right now, and they're reaching for 2026. But we'll see. That would definitely make them a pretty darn valuable company if they were getting $4 billion in revenue every year. So they are all going down, says Silver. I own more than green. I owe more than green. And Acorn Sucks says, I like Rumble so far. Yeah, I think actually, potentially even in the description of this video, I don't know if I have it. No, I don't. But I should change the description of this. to include my Rumble. In not the live streams, but in my normal videos. If you look at the description, I have my Rumble, I've got my Instagram, my Twitter. Eventually I'll have my True Social in there. So I do post my videos to Rumble, I will say, if anyone's interested in viewing them there. I don't get nearly as many views on Rumble. It's a smaller platform at the moment, but I do post them. I'm getting close, I think, to 100 subscribers on Rumble. So there you go. If you guys are interested in that, if anyone wants to watch me on Rumble instead, feel free. It's a lot easier to watch me on YouTube. I think it's a slightly better platform technology-wise at the moment. Right now, it's a little bit more convenient. There's some additional features. It's a little bit cleaner looking, but if anyone really cares that much, you know, I mean, it's the same video, but if you want, you can see me on Rumble too. What is Rumble, says Nicholas Morello? It's a video streaming platform similar to YouTube, except it's built around the idea of, you know, no censorship, and you can have free speech and whatnot, and they're not going to regulate it too much. Like YouTube has some regulations, and will stop certain videos from being shown, I believe, is the case. I think they'll take some stuff down. Rumble doesn't want to do that. Their terms are much more lenient than YouTube's terms. I think that's the deal. So it's YouTube alternative. But I post the exact same video to both. So, you know, if you'd rather watch on Rumble, feel free. But YouTube works just as well for my videos, right? My videos aren't getting censored, not yet. So feel free to watch it wherever you please. Okay, let's see. What have we got? What is trending today? So on Ape Wisdom, it looks like Tesla's actually trending. People, I guess, are surprised to see it's up 170% mention-wise. People are surprised to see that Tesla has been plummeting down below 1,000. I guess that is kind of big news. Although, you know, a lot of those posts didn't come out until earlier in the morning, I will say. So, or sorry, a lot of those posts didn't come out, you know, until Tesla fell, which was, or a lot of those posts did not come out until before, they were out before Tesla fell. That's what I'm trying to say. So yeah, Tesla probably fell after a lot of those posts were out. So it's not necessarily about Tesla being below 1,000, although it was actually in the pre-market. So maybe some of them were. And yeah, SPY is taken off. That's right. We'll see if it takes any stocks with it or if it's just the SPY going. It looks like IWM is up a decent amount too, up 1.5%, whereas SPY is up 0.88%. So we'll see. Maybe today is going to be a green day. And Acorn Sucks says, I don't see your live stream on Rumble. Yeah, I don't live stream on Rumble. I don't know how to do that. But the videos are on Rumble. Not the live stream, though. I'm not sure how to do that yet. Like I said, YouTube makes it pretty darn easy. I just click live stream on YouTube. Maybe I could do the same on Rumble. I don't know if I could do it to both. I should try that, though. So, let's see on Stock Twits. What's going on with this? So, CFVI is the #1 ranking stock on Stock Twits. The most active stock is the Rumble IPO. Let's see what it's doing. CFVI. We haven't taken a peek at it in a bit. So it looks like it has actually given up most of its gains. We didn't end up getting that high. We got close to the highs, but we did end up sinking with the market. So that's unfortunate. That's too bad. And Express, EXPR, up 7.56%. EXPR, let's take a peek. Yeah, it looks like it had a very nice V with the market. Geez. Well, not even a V, more of a U shape, but very nice. Look at that. Up 6.41% at the moment. ExpressInc.com. Not quite up to the highs that it was on Friday, but certainly following the market into green territory. So good stuff to see. We'll see if the market can regenerate some of these losses that we've had over the past couple of days. I don't know. I mean, this little move up is nothing that we haven't seen before. We've seen bigger moves up. Even on Friday, we saw a bigger move up than this. We got up to 460 before bouncing down. So we'll see how high we get before the market continues taking us down. It might be the end. Obviously, you know, everyone wants to pick the bottom. There sure is a lot of cash in the system. And it has been a fairly bloody market for a lot of the smaller market caps. Definitely. So we'll see. We'll see what happens to it. But overall, not looking like a horrible day for SPY. Up almost 1% at this point. If we can get up, yep, there we go. Over 1% gain on the day, up to 458. We'll see how long this can continue. If the market sell-off continues, that would catch some people off guard potentially. And Kitchener Leslie says, did anyone here invest in Regeneron? I did not. I did not. Let's see. What's Regeneron's ticker symbol? REGN. We'll take a peek at it. REGN. So they're up 0.48% on the day. Not bad. Not bad. Considering, I mean, the markets are up now, but we'll see. Regeneron, looks like they took a big dip way back when. They're pretty darn expensive per share, $600 per share. Over the past year, they've gone up from 500. Past 2 years, up from 300. Past 3 years, up from 300 something. Okay. So yeah, not bad, but pretty darn expensive per share. Half the price of Tesla, just about. Pretty darn close to that. And penny for a burnout war story. Vicious bag holders, vicious CNTB play. It's safe using an American-based company with former military contractors that have access to their markets. CNTB, we'll take a peek at CNTB. Looks like they're up 4%. Looks like a pretty small, low-volume stock, though. A lot of these gray bars that don't move at all. So pretty low market cap stock, or probably low market cap too, but definitely low volume stock. Geez. And Express is up almost 9% now, says Hero. EXPR, we'll take a peek at it again. Yeah, it's up 8.45%. So look at that. It's doing pretty good. The markets are doing pretty good, and Express is following in suit. Sundial is struggling to get up above 57 cents. It looks like it's topped out there about 3 times. We'll see if they can't do it. We'll see if we can't do it, but hopefully we can. Okay, and it looks like some of the smaller stocks are coming back. You know, initially this list was all red, but CEI is moving up. We're up 4% on CEI. Smile Direct Club, I know some people were interested in. You know, this one has really gotten hurt a lot since people were talking about it way back when as a big short squeeze stock. I never talked about it too much, but what people were saying way back when was that Smile Direct Club, imagine this, they were saying, imagine this. Imagine that AMC is the mother of all short squeezes, that GME is the father of all short squeezes, and they were saying that SDC was the son of all short squeezes, and I'm pretty sure that most of the people saying that were bots. They were bots and they were Hoot Money who was saying that. So we'll see what ends up happening with SDC, but it has certainly gotten hurt quite a bit. Definitely didn't short squeeze. It looks like the shorts really made a lot of money on that one. I think that potentially the bots were trying to maybe even trick people into getting in to Smile Direct Club, so that the shorts could make even more money and short even more shares and make more money off of those people, but who knows. It looks like, yeah, a lot of the shorts have been covering lately. If you take a peek at the Ortex data for SDC, as Smile Direct Club has plummeted, right? Whenever it moved down from around the 5s to the 4s, a lot of shorts started covering. They're continuing to cover. So it's down to 22% short interest as a percentage of the free float right now. 25 million shares. It used to be much higher, so it was around 33%. So we've lost about a third of what was short on SDC. Travis Brusso, you only get hurt if you jump off the roller coaster in the middle of the ride. That's somewhat true. You know, it's somewhat true, but potentially, I mean, some companies do go bankrupt, I will say. Some companies go bankrupt. I'm not saying that any of these that we're watching will go bankrupt, but sometimes companies go bankrupt. So sometimes you can get hurt, even if you don't jump off. A lot of companies end up going bankrupt. Let me actually find the statistic. So let's see how many companies go bankrupt. Okay, so let's see if this is going to give us what we want. It's just the article that keeps popping up, but here we go. Bankrupt companies. 24 bankruptcies prove you can lose 90% of your money in stock. Okay, so bankrupt companies, just this year so far, and this was posted in 2020, 24 publicly traded U.S. companies have gone bankrupt. Oh, or have they actually? Have filed for bankruptcy. This is bankruptcy data. In an analysis provided to Investors Business Daily, all these stocks still trade, but nearly all are delisted from major exchanges. Okay, so some stocks do go bankrupt, it looks like, obviously. But it looks like they probably get delisted first. And Acorn Sucks says they don't have to go bankrupt. They can dip and never recover or take several years to recover. Yeah, that's true too. That's true too. And Don, I appreciate the follow on Rumble. And Nicholas Morello, any small caps with good news today, Rob? It's not looking like there's great news today, but let's see. What we were looking at something really good. You know what? CFVI was actually up pretty big. It's down now for the most part. It's down. It's only up 7%, but it was up 30% initially. And I think this was related to DWAC as well, but it's the Rumble IPO. And it's not necessarily the smallest cap. It's a $400 million something market cap. But let's see. They were up, it looks like, on comments confirmed to Benzinga that the CEO, Howard Lutnick, earlier commented that DWAC, SPAC partner with True Social, is going to pay CF Acquisition Corp's merger partner Rumble for distribution and other services. So it looks like Rumble was going to be getting a deal with True Social to potentially distribute some information for True Social, and that they were up on that news. So they were up to $16. Now they're down again. This one is a potentially very interesting play. I think I'll wait until it actually merges with Rumble and they get their new ticker to get in on it. Maybe sell some options on it. We'll see what they end up doing. But they're doing pretty good as of today. Even they're up to 12.65, whereas on Friday they were trading around 10, and they moved up towards the end of Friday. But and like Acorn Sucks said, they don't have to go bankrupt to lose money on them. You know, sometimes stocks just move back down. Sometimes they just move down, and then you never hear from them again. Right? They're just kept low, and hopefully that doesn't happen with any stocks you guys are in. But something you can do though with those stocks is you can always sell options on them. Right? You can every month. Even if a stock has gone down a lot. So let's take a peek. What would be RIG? I'm pretty sure. RIG might be a good one. So over the past year, they did decently, but over the past 2 years, all right. Let's take a peek at maybe even the past 3 years when they were up at $9. Maybe you were buying RIG at $9, right? And then it moved down to as low as 65 cents, and then it moved up to $5, and now it's around $3. But you wanted to go back up to $9 because you don't want to sell for a loss, right? You look at RIG and you say you don't want to sell for a loss. Well, now it's trading at $278. And what you can do is you can look at the options on it. And every month, it's the 6th of December right now. So let's look at the 7th of January. It's trading at $279. You could sell the $3 call options on it and use your shares as collateral. And you get somewhere in between 8 cents and 28 cents per share. So if you have 100 shares, it's, or let's say 1,000 since it's a smaller price stock, maybe you have $2,700 in at this point, then you could be getting, I think, 80 or $280 a month just selling call options on it, and it could just stay the same. As if it did pump up, then obviously you would end up selling your shares for less. But this is assuming a stock kind of stays stagnant at the lows, right, and doesn't start moving back up in a big way. You can still sell options on stocks, even if they do fall quite a bit, and over a long time, you can eventually recoup your investment with that. But there is the risk that if RIG starts trading above 3, then you end up exiting out of that position. Granted, for a decent gain, right? Because it's trading at 280, so it would have to rise almost 10% already just to get to 3, and then you'd be selling the option on top of that. And this is only a month out, so you'd be making 10, 15, 20% in a month. So not bad, but obviously you want to sell it for 9 or whatever if that's what you were doing. But that's a way you can make some money back on some of your losers. You can start selling call options on them, using them as collateral every month, ideally for higher strike prices, because you don't actually want them to expire in the money if you're hoping to get back up to 9 someday, or if you realize it's not possible, you could still sell the call options and just collect the premiums. And Silver is back. Good to see Silver back in the chat. But the markets, it looks like SPY has started to find some resistance at 458. We'll see. We'll see if that maintains itself as a resistance level, or if we can blast through it, or if it's going to bounce us down further. Hopefully not, but unfortunately, a lot of stocks are seeing some pain. over the past bit. It wouldn't surprise me to see the pain continue. You know, I think a lot of the times during these market crashes, there are some fake outs where we move back up for a little bit. It's obviously not just a straight line down. That would be incredibly painful for a lot of people. It definitely balances itself out, letting some new buyers come in, buy this dip up, and maybe we'll see another dip. Maybe we won't. Maybe we won't. Maybe this will be the end. And Nicholas Morello, Rob, do you think Evergrande will bring down the markets? I know they defaulted on some debt, but I don't know if they'll bring down the markets. They certainly could. It's not impossible, but I don't know. Let's see if there is anything. If there is any new. Okay. So Evergrande shares plummet 20% to new record low as default fears resurface. That's what CNN says an hour ago. So an hour ago, looks like Evergrande has been moving down. But we will pull this up. Evergrande moves towards restructuring. State swoops in to contain risk. So it looks like China potentially has Evergrande's back. At least they have investors' backs. They don't want Evergrande to cause a massive market crash. I think the Chinese markets have been feeling some pain as well. But China Evergrande Group has set up a risk management committee as the cash-strapped property developer inches closer to a debt restructuring that has loomed for months over global markets and the world's second largest economy. The real estate giant, which is grappling with over $300 billion in liabilities and is at risk of becoming China's biggest ever default, said on Monday that the committee included officials from state entities and would play an important role in mitigating and eliminating the future risks of the group. So for those of you who don't know what Evergrande is, it's a potential market crash catalyst that people were looking at, and we'll pull up the SPY chart. I'll show you when. People were more worried about it. We look at the past 90 days. People were more worried about it over here. We'll look at the past year, actually. That's probably better. People were more worried about it around, what is this, 8? I think that's August is 8, and then, yeah, and then September, people really started worrying about it. Around September 1st is where we peaked on the markets, and then we started moving down on the fear that Evergrande, which is China's largest real estate developer, would be essentially going bankrupt, right? Because they had taken out a ton of debt. They wanted to build a ton of houses. They were, and it was a very risky thing they were doing. They just kept taking out more debt to buy up more property and to develop more property. And when the real estate market took a little dip, they'd over-leveraged themselves, and they couldn't end up paying off all their liabilities. Some projects took a little bit longer than they thought, and they just weren't able to sell enough in a certain period of time to meet their debt obligations. So now they're at risk of default. They even went as far as telling their employees that if they wanted their Christmas bonuses, I believe it was, if they wanted their bonuses for the year, then they had to lend the company money. So some of their employees were asking family and friends to get some money to lend to this company because they were that cash strapped. They needed to beg their employees for money and threaten not to give them bonuses if the employees didn't lend their employer money. So they aren't in a good way, right? They're not in a good situation. They definitely have a lot of liabilities. Like I said, at risk of becoming China's biggest default ever. $300 billion in debt. This is a massive company, at least it was. It's definitely fallen a lot in value since they started having these bankruptcy worries. But now it looks like they have a risk management committee, and like China is with them. So they have some state actors potentially at this committee helping them mitigate the risk to the rest of investors. So it looks like, I mean, even if they did default, I think China would probably stop it from having too much of an effect. China really doesn't want to lose on Evergrande too much, right? I don't think they want a huge market crash because of their company. They already have the pandemic to be blamed for. A lot of people blame them for that. So Pedro Volta, E. Silva, hi Rob, can you comment on PHUN? So let's see, PHUN, it looks like they've got a little bounce below 3. It looks like they did bounce up earlier on this DWAC news, potentially, that DWAC successfully raised the billion, but have followed suit with DWAC. Now, PHUN, I will say I do like them. I think that they have potentially more likelihood of rising than DWAC, right? There might be a higher likelihood, but I don't think that they would rise as much as DWAC. And that's because DWAC, I think, is going to be probably a pretty successful company. I think they're going to make a lot of money looking forward, especially based off this most recent projection of reaching 40 million subscribers with a $9 average fee per month by 2026. I think they're going to be raking in cash. But I also think that PHUN does tend to trade alongside with DWAC pretty well. So I think if DWAC is moving up, as long as PHUN isn't confirmed to not be working with DWAC, I think they'll probably move up with them. So they have that catalyst going for them, but they also have a bunch of Bitcoin. They've started accepting Bitcoin for their light personal computers, and they launched PHUN, which is a token that, ideally what their goal is for people to get paid in PHUN for giving away their private data, right, to the big tech companies that already just take the data and give you nothing in return. Their goal is to eventually have you get paid in PHUN, and they hold a lot of PHUN too. So they have a couple of different things that could be moving them up big, right? The crypto community could get in on PHUN, or they could move up on DWAC and TMTG hype. So there are a couple of things that could be moving up PHUN. So that's why I think they have a higher likelihood, right? There are more potential catalysts that could be moving them up, because any catalyst for DWAC is a catalyst for PHUN. But I think over the long term, DWAC might be doing a little bit better because that's actually confirmed to be working with TMT or merging with TMTG, whereas PHUN, I think at this point, it's still just a rumor. I don't think there's been a confirmation. So that's what I think about PHUN. I think it's potentially lower risk, but also potentially lower reward. But still pretty good chance of it doing something, of it pumping up big. There, you can already see it pumped up big in the AM this morning, up to 374 from $3. So there are a lot of those pumps that you see with PHUN. If you look over the past 90 days, you can see a bunch of these spikes up, and you can certainly make some money on them. Even this morning, we saw the spike up. So you can make some money with PHUN, that's for sure. And how's crypto looking today? Ask Abstract. We'll take a peek at crypto. Crypto, if anyone was looking at it on Friday, it wasn't looking very good, and it's still not looking great. We didn't end up covering it on Friday because it happened after the stream ended, but Bitcoin down to 48,000, down 1% on the day, 15% over the past 7 days. So Bitcoin is low. Bitcoin's pretty darn low. It looks like we might be seeing a crypto crash sometime soon. Ethereum down to 4,000, down 2% or 6% over the past week. And everything is pretty much suffering except the stable coins are staying around $1, of course. But Binance Coin down 10% over the past week, 1% on the day. Solana down 11% on the past week. Cardano down 17%. Ripple down 20%. All of this over the past week, though. As of the day, everything's down 1, 2, 3, or 4%. Dogecoin down 3% on the day. And Shiba Inu down 6.85% on the day. It looks like Shiba Inu is continuing its downtrend. It's really not looking good for Shiba Inu, unfortunately. I still hold a little bit, but I had sold most of the Shiba Inu way back when. Not at the peaks, but right before the peaks. So Shiba Inu is continuing this downtrend. It looks like the most recent pump up wasn't enough to keep Shiba Inu going. So it has been trending down, which is unfortunate. But overall, all the cryptos are down. It's not just Shiba Inu. So at any point, these could turn around. But all in all, the cryptos are suffering quite a bit. So not the best thing, but not the worst. This is not the biggest crash that we've seen in crypto by far. So it's they're by no means at their all-time lows or anything like that. They're still up pretty darn high, and it makes sense to have some fluctuations, right? Crypto can't be a straight ride up. In fact, the time prior to this, just a couple of months ago, they did see a similar dip down before they made their new run up to all-time highs. So potentially this could be a good thing, right? Just towards the end of the year, maybe some people are looking to sell their cryptos, claim a little tax loss on them, and buy them back. Hey, Rob, good morning, bud. Is that you on Twitter? Just gave a follow just now. Not sure if you... Buddy B, if you're on my channel page, if you're on the channel page, then the top right of my channel page, there should be a link to my Twitter. And that should be it. But if the username's Rob Almazy, one word, then that should be it. It's a little animation of me sitting like I'm doing yoga or something, or meditating, something like that, I think. I don't tweet that much to Twitter, unfortunately, but I might start doing it. So it's probably me. I don't think there's any other Rob Almazy on Twitter. And Silver says, I could see it drop to 20K. Yeah, so here's an interesting thing with crypto. Towards the end of the year, a potentially really good move and almost a manipulative move that a lot of institutions might be doing. As we pulled this up earlier today, cryptos, as far as I'm aware, are not subject to the wash sale rule. So see this situation, right? Say cryptos dipped down to $1 per Bitcoin, right? Obviously that wouldn't happen, but if they did, a lot of institutions were buying at 30, 40, 50,000 and maybe have a bunch of gains on other stocks. Now, potentially a reason why crypto is dipping is because institutions are purposefully pushing cryptos down, right? Because they may want cryptos to fall a ton. They may want cryptos to fall a buttload so that when cryptos reach their bottom, when cryptos are down a ton, they can sell their crypto, then buy it back the next minute and claim a massive loss on their taxes that's not applicable to the wash sale rule. So they can do it. They can sell it 1 second and buy it back the next, and just claim a massive loss on their taxes that could potentially offset a lot of their stock market gains. That's a possibility. As far as I'm concerned, that may be what's going on with crypto. It certainly makes a lot of sense. I'm definitely going to be taking advantage of that. Obviously, I can't on Bitcoin or Ethereum because it would have to fall probably more than it would. I think I bought Bitcoin at 15K and Ethereum at 2K, so I don't think we're going to see prices that low. But with Dogecoin, I definitely consider doing that. So as far as it goes, I'm willing to collect that little tax loss on it. So Mike Potter says, sorry to wish for it, but I'm loving cheap. Please don't recover yet. I know, yeah, the markets, we'll see how much lower they can go. Looks like a lot of stocks are struggling. It looks like Sundial just had another bounce off of 57, so it's not looking like it's about to recover just yet. DWAC looking like it's moving further down as well. Looks like it's going to test 50 or 42 again. And Paul, good morning. Good morning. Welcome to the stream. And Paul says, side note, hear anything on CFVI? So yeah, CFVI, it was certainly up much higher earlier today, but it's been falling ever since. It's up 3% on the day now. But I think the news that we had for it was that the CEO of CEI, I think it was CF Acquisition Corp, shares are trading higher on continued strength. No. Where is it? So Cantor's Howard Lutnick, in earlier Bloomberg interview, said he can confirm DWAC partner to True Social use CFVI partner Rumble for distribution. So there's a potential deal going down between CFVI and DWAC. So looks like it's a confirmed deal, actually. So could be good for CFVI. We'll see what happens over the long term with it, how good of a deal it ends up being. I don't think we have any details out on it, but obviously anything that is tied to DWAC starts moving up, and we've seen that. You know, we're still up 6% on CFVI on the day. We were up about 30% earlier in the day. So, yeah, there's good news there on that front. And Mike Potter, I kind of agree with you. I am happy to see some of these cheaper prices. I'll probably be buying sometime later this week if we continue to fall. I would rather see us move down in the short term temporarily, right? I'd rather see the account values move down a little bit lower so that they can move up even higher in the future. You know, I don't need the money this week. I don't need it next week. I don't need it next month or even next year. I'm just happy to have it grow over the long term. So the cheaper I can buy these things, the better, in my opinion. That's what I'm happy to do. And Abstract used to work with someone named Mike Potter. Might be the same guy. Could be. I used to watch movies about a guy named Harry Potter, so I don't know. Maybe, probably not related, but might be. And here's the article that I was talking about with the wash sale rule. Cryptocurrency and the wash sale rule, a tax loophole that may soon go away. So it looks like this was written just earlier this year. So it looks like as of November, it's still the case that you can sell cryptos 1 minute, buy them back the next, and claim a loss on them because they aren't considered, here it is, the wash sale rule applies solely to financial securities, and the cryptos are not considered financial securities. So if you're looking to claim a little tax loss, then that's a potential way to do it. I'm probably looking to sell some Dogecoin later this year. And Mike Potter says, I'm a trucker who doesn't know magic. Sadly, that's too bad. And Abstract still watches movies about someone named Harry Potter. I was just watching it, I think Saturday night I was watching it. Some friends wanted to watch Harry Potter, and I said, all right, those are good movies. I like those. Especially the ones where they're really young. Those are really cool. It's just a good vibe to those movies. And Kitchener Leslie, what about Harry Reams? Can't say I know who that is. Don't know who Harry... I never get your references, Kitchener Leslie. Some people in the chat do. I don't. I get some of them maybe, but not all of them, that's for sure. Man, it looks like Sundial really wants to get past 57. It just keeps trying. It just keeps pushing. This is the fourth time it's tried. We're about to go on the 5th time it's tried if it goes up again. It looks like it's on the way, but it really wants to get up past 57 cents. We'll see if it can do it. Maybe it can, but I'm not so sure. And also regarding CFVI, if anyone was still interested in it, I'm just going to pull up. It is the #1 ranking stock on StockTwits. It looks like, not many stocks are up today. So even a stock that's up just 6% on the day can be the #1 ranking stock. It looks like we just haven't had many stock mentions yet today, only about 7,000 mentions for it. But a scary statistic for those of you who haven't been in the stream the whole time. We showed this at the beginning of the stream. It's the FINRA statistics showing margin numbers, right? So basically what this chart is showing is that margin debt has been increasing pretty much the entire year, and that we are now at the highest level as of October, which is the latest date that they've reported for. The highest level of margin debt, I don't know if it's in history, but at least this year, and I would assume that this year has some of the highest numbers in history since there's just way more cash in the system. But we've got almost $1 trillion in margin debt, $935 billion in margin debt, and that could certainly take us a bit lower if some people start getting margin called, if the markets dip even more. Then we could definitely see some stocks getting dumped on, especially if they're riskier stocks that move down a bunch. Some people might need to liquidate their positions because of the margin calls that could potentially be going on. Let's see, what is Hood doing? It looks like Hood has recovered a bit. Let's see what the Hood options are selling for. Hood options, so the January 2023 options. All right, they're still selling around $6 or $7 for the $20 put options. Eric says, and Kitchen Leslie, do you know Rolly Fingers? I do not. I do not know Rolly Fingers. And Eric says, any thoughts on GGPI and the Polestar Volvo news? So GGPI, I remember that was a big one when it first came out. For Polestar, something happened with them. I forget exactly what it is that happened on the 21st. So, Polestar expansion. EV maker Polestar is aiming for sales of 290,000 vehicles by end of 2025. Okay. Yeah, so I'm not sure exactly what I think about this. I forget why this stock, why GGPI. I guess, are they taking Polestar public? Are they the SPAC that's taking Polestar public? Is that what's going on there? Okay, yeah. The Polestar SPAC merger. Okay. Yeah, I mean, like I said, there's a lot of EV hype. Obviously, over the past couple of days, a lot of stocks have been seeing pain. It doesn't surprise me to see this moving down. There are a lot of EV companies actually coming out right around now. We've got the Polestar, obviously, with GGPI. We have Lucid moving up. Tesla was moving up. Rivian just came out as an IPO. NAKD, Naked Brand, is taking public. Centro Automotive, another EV company. So a lot of companies, a lot of EV companies going public right around now. And we'll see how much cash there remains in investors' pockets who are willing to invest in these EV companies. I mean, I like NAKD stock. They currently, I think, have the company they're taking public, Centro Automotive, has the record for number one most delivered EV commercial electric vehicles. So I think currently they have delivered more commercial EVs than any other company. So impressive statistic. I think that when they fully merge, then some people might get into NAKD, push them up. We're also looking at a fairly interesting pattern on NAKD. I'll pull up the 180-day chart, but NAKD has been following this pattern of higher highs and higher lows over the past while. We just recently broke it on this most recent market dip. Doesn't quite surprise me to see that we ended up breaking it on a market that's this bloody. So I think that when they do come back, they could come back in a big way, though. We'll see if they end up conforming to this pattern once again, if this is just a little blip in it. But once they merge with Centro, I think that'll be really good for them. As long as the EV hype can last, right? Granted, Tesla's falling a bit. That may mean that, as these other EVs are falling, people are looking to some new EV companies if they like EVs. And some of these bigger ones like Tesla, Rivian, and Lucid are falling. They might be looking to put them in some of the smaller EV companies that haven't pumped up huge yet. So, we've seen pretty big gains with a lot of these EVs, but maybe we'll see a rotation out of these larger market caps into the smaller market cap ones, especially when they have something as impressive as #1 most delivered commercial EV vehicles. So we'll see what NAKD can do. And Kitchen Leslie says, I have 300 shares of NAKD because of you. And once again, Kitchener, not financial advice, not telling you to buy it. I bought some myself, but not telling anyone to buy it. But yeah, I think it's one that could do well, especially in 2022 once this market pain ends. Obviously, the low market cap stocks are getting hurt the most. And Eric says, guessing I'm putting too much value on it since Polestar's Volvo cars. GGPI, let's see. I don't know if it's too much value. I mean, it's tough to say, right? If I have not paid too much attention to the Polestar GGPI news, though. I have really not looked too deeply into it. It certainly got hyped up a lot when EVs were getting hyped up. So, we'll see. Maybe it can come back in 2022. A lot of people are selling their shares of a lot of companies, especially, if some people are buying at these higher prices. And the stock then dropped to the 13s when they bought it at 16 or 15, they might want to take a little tax loss on it. And Kitchener Leslie says, I know, dude, you brought it to my attention, so I looked into it. Good, I'm glad to hear. And Eric jumped on NAKD as well. Yeah, it's been getting pretty darn cheap. And it's very interesting that they will be an EV company that also has the swimwear brand, too. So I don't know if their plan is to sell the swimwear brand eventually, but they'll basically have two business models going for them. They'll have EVs, and I don't know if they'll keep the swimwear and apparel brand going, but we'll see what happens with them. It's an interesting one for sure. They were a meme stock at one point also. So back over the past year, they got to highs of $3.40 on meme stock hype for naked brands. So it could definitely pump up again. It could pump up again, especially if we see another meme-driven rally early on in 2022. They could pump up off of that. They could pump up off EV hype. There's a bunch, or like I said, the meme stock rally. So there's a couple things they've got going for them. So yeah, they're one that looks interesting to me. I got a couple thousand shares. We'll see what happens. Not too much, but we'll see what happens with them. All right, guys. Now I'm taking a peek at the chart. Not the chart of stocks, but the chart of the viewers and the likes. And it looks like we have 90 likes. And if anyone would like to be one of the last 10 people to hit the like button to get us up to 100 likes, that would be greatly appreciated. I think we could do it, this pump up on the likes. Let's try to pump the like button and see if we can't get 10 additional likes. It would only take 10 people. And we'll see if we can get to 100. I know a lot of you guys have probably liked the stream already, but we'll see if we can get to 100 likes. We're at 91, so there's only 9 spots left. 94. There's only 6 spots left to see who can be the one. 97. All right, the last 3 people I'm sure will pop in any second, and I'm sure we'll get to 100 any second once YouTube updates. 99. Who wants to be the special guy, the special guy or girl who clicks that like button? There we go. Now we're at 100. There we go. And Saborn Video Services, I'm like 92. I appreciate it. And Kitchener Leslie says, yeah, there should be a stock named FUCT. Let's see. Can't find the symbol. They should make it though. That would be a good meme stock. That just sounds profitable to take public, right? You take it public, you sell your shares once it's pumped up huge. That could definitely move up big. That could definitely move up big. So it would not surprise me to see. And Tesla, it looks like it's starting to move down a little bit. SPY, not quite at the highs. It looks like they did bounce off of 458. We'll see what happens with them throughout the course of the day. Sundial doesn't even get up to 57 cents again. It looks like they started moving down, so we'll see. We'll see what happens with them, but DWAC, just a solid downtrend throughout the course of the day. Though they have consolidated around 42. It looks like they found some support there a couple of times. We'll see if they can stop the descent at 42, down 6% on the day. Smile Direct Club, notably up 6%. It looks like they just keep rising. Maybe they will be the son of all short squeezes after all. I don't think so, but maybe they will be. They have an underlying business model. Obviously, they're not just a meme stock, but I think they lose money right now. Yeah, so they're losing money currently. But if they could get a meme-driven rally to actually move them up big, then that could be good. That could be good over the long term. We could see it happen. All right, guys, I will be right back real quick. Quick bathroom break. I know I said I wouldn't do it, but I will. I lied. So I'll be right back, guys. Just sit tight real quick. All right, I have returned. I am back. Okay, so notice how this all happens when the major players are near the end of their lives. Says Kitchener Leslie. Yeah, I mean, the market crash I assume you're talking about. Yeah, I mean, we'll see what happens with it. Obviously, maybe there's some fear surrounding that. If they pass on their inheritance, people want to cash out of the stocks that they're holding, then potentially we could see a little bit of a crash. Yeah. We could. There's certainly some catalysts that could crash us. I was hoping TLRY would go up a bit from news about the planned legalization in Germany, but still nothing, says Eric. Yeah, I mean, I was hoping that a lot of stocks would go up on news of planned legalization, but it hasn't happened. All the stocks have gotten pushed down, and they certainly tricked us with this little uptrend they made it look like we were beginning. With a lot of these cannabis stocks, they definitely tricked us. I thought that this could have been the one that took us on a long-term uptrend. If we just continued it for a bit longer, I think it would have probably. But then, of course, this market had to turn blood red and start moving us down. So, no surprise there. But I think that they might be doing the exact opposite now. I think they may be tricking us by moving us to the downside a little too fast and too far. I think that this may be the last little leg of the downtrend that we've been on for the past year. For a lot of these cannabis stocks, I think 2022 is going to be the year when cannabis stocks really skyrocket and start real long-term uptrends. When we get U.S. legalization, of course, I think that'll be the ultimate catalyst that really starts moving us up. So it's yet to be seen if that's actually going to happen. We don't know 100%, but it seems very likely that 2022, especially if the government's looking to collect a little bit of extra tax revenue, that we could definitely see some stocks moving up. I could see that. And Nicholas Morello, what's your average on Sundial, Rob? So in this account, it's pretty high because I only recently started buying. I started buying on this account ever since the pump up. So my average on this account is 76 cents. The average on my other account is an interesting story. So I'll pull up the Robinhood and I'll show you what the average says, but then I'll tell you what the average really is. It's a somewhat complicated situation. So the average cost it says on the Sundial account is 48.96 cents. Now, not quite true, because the way that worked was I got, we'll look at the Sundial chart in the top left to explain this. I got in initially with 10,000 shares, I think it was, at, well, we can't even do it with the year-long chart. We need the 2-year chart. I got in with 10,000 shares at 19 cents. So around here, and we continued moving lower down to lows of 13. I should have bought more there. But at 19 cents, that's where I bought into Sundial, 10,000 shares. And then an additional 2,000 shares, what I did after this big pump up was around here probably. I sold some $1 put options for a 50-cent premium. We ended up moving down below $1. They expired in the money, right? Because we were below $1. They were $1 put options, but I sold them for a 50-cent premium. So what happened was my account ended up buying those additional 2,000 shares for $1, but I had collected that 50-cent premium, so really it was like I was buying them for 50 cents, which we still haven't even hit yet. So even those shares are still green technically, though it assumes that I bought them for $1, which, on the calculation, sure, I technically paid $1 for them, but collected the 50-cent premium. So I'm not sure that would make my average if I counted it as a 50-cent buy instead of $1 buy, but that's why the average seems much higher on Sundial on the Robinhood than it is technically. So I think probably it would make it maybe like a 28 or 30 cent average. So still pretty darn low on Sundial, but on this account, it's higher. It's at 76 cents on this account. And hopefully we'll get it a little bit lower before the end of the year. Hopefully we'll get it a little bit lower. If we can dip down a little bit more on Sundial, I'll be buying some more. So let's see. So Eric, hi, how did the chip under? Oh, I can't read that. So Abstract says, if you need some gold music, let me know. That would be cool. Gold. I don't know what gold music is necessarily, but that sounds very cool. I watched some of Matt Core's streams actually. What Matt Core's does, it's interesting. I just recently listened to a couple of his. So Matt Core's on his live streams, what he does apparently is for the first minute he he starts the stream and then he starts a song that plays while everybody joins in for the first couple of minutes. So it is cool stuff. It is cool stuff that Matt Gors just has. I think it's probably music that he produced. It sounds like it's unique to his channel almost. It says Moon Gang at some point, so he's got a big team probably producing stuff for him. It's cool. We'll do something at some point. San Diego, I've heard from sketchy scores the market is going to heavily crash in 6 months. Oh, and I think you said from sketchy sources, the market is going to heavily crash in 6 months. Yeah, I mean maybe. Who knows what would cause it, but there are certainly things that could. There's certainly some things that could. Yeah, the market, I don't think it's going to crash too much, though. I mean, obviously, we would need a catalyst. I don't think it's going to crash for no reason. Even this crash that we're seeing right now, a lot of it, I think, is tax loss harvesting. And to be fair, today, it's not looking like much of a crash, right? We're up 1%. So we'll see if we can get back above 460. Maybe that would mark the end of the market crash. If we could do it, maybe 470 is where we need to get. If we could get back up to the highs, then I don't know. I don't know how low we could get. Past that point, like if we've already started moving back up on the uptrend, I don't think we'd be moving that much further down, but we'll see. We're not there yet. We're not out of the clear. We're not out of the woods yet. We're not in the clear quite yet. We're still probably going to move further down, and it's my expectation at least. Obviously, this could be the end, and it would be nice almost to see this be the end of the market crash. It would be nice in a way to see the account values start moving back up. I know a lot of people would be happy with that, but we'll see. Because Cali is waking up now. 8 a.m. says Silver Cali is. Yeah, Cali's waking up. It looks like a lot of people do get up early on the West Coast. I know to start looking at the markets early, but you got to get up at 6 if you're on the West Coast. That's a tough one. That's a tough proposition for a lot of people getting up at 6, and then you got to get right up out of bed if you're waking up at 6 to get to the markets. That's tough. So I certainly wouldn't be doing it if I was on the West Coast. But I have no desire to live on the West Coast. It seems like a very early market time. I don't want to do it. I like the West Coast. They have nice weather, that's for sure. Some places, at least. I don't love the fires. Oh, Nicholas Morello, I'm on West Coast. I'm up at 4 a.m. Jeez. That's tough, man. When do you go to bed? That must be a short night's sleep for you, or you're in bed pretty darn early. I get up at 7, so 7 o'clock my time, I suppose. And if you're up at 4 a.m., then I guess you're up at my 1 a.m.? That's crazy. Wow. And Kitchener-Leslie is in Cali. Well, some people are willing to get up a lot earlier than I am. I get up at 7 West Coast time. So we'll see. Maybe I would like to get up earlier, I'll admit. I would like to get up a little bit earlier, but it's looking like it's 11 o'clock now, though. So we're looking to end the stream around 11 as usual. So thank you guys for joining us. It was a good stream. The markets didn't crash as much as we thought they would. They've been doing not too bad, actually. SPY is up about 1%. A lot of stocks are down, though, on the day. Sundial's down 1%. DWAC, let's see what that's down to before we end the stream. It's down about 3%. It looks like it's actually moving back up. So overall, good stuff. But thank you guys very much for joining us on the stream. We'll see you tomorrow. Hopefully this market won't be too much bloodier, but if it is, then it's only a buying opportunity in my opinion. But other than that, guys, have a great day. I'll see you in the next one. Bye.